Hello guys, welcome to the Trading Parrot. 6 days ago, we started putting out thumbnails that are quite bearish. In my channel, I cover long-term for Bitcoin analysis, and I spend a lot of time as well trying to keep you informed on potential swing trades. Enter one day, exit a couple of days after. My thumbnails tend to give a high-level overview of how I feel about the price. And you can see in here, 6 days ago, we have record selling wall. It won't be that easy. That was the previous weekend. Pullback targets. Wells did it again. Is this distribution echoes or something else? Followed by testing support. The support is at stake. It won't hold. What could go wrong? And then 2 days ago, we started with it's playing out now. The feast is in progress and the hammer hits. 1 day ago, a pending move down. And 20 hours ago, breakout, retest, or are we rolling over? In today's video, we're gonna continue understanding we have incredibly important data. The most important of the week happened yesterday. And I wanna give you my take on that. Of course, there are some opportunities for swing trade longs that I'm going to reveal throughout the video, probably something on the 4 hour that you're gonna enjoy. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yes, guys, thank you so much. Yesterday, we made 325 likes on the video in the morning. I couldn't put out an altcoin video, but in return, I shared this video that we recorded in the evening with Paul Varron. You can find the channel. This is the channel. I got invited once again, and we cover XRP, Uniswap, Solana, Sui, Ethereum, BTC. Make sure that you don't miss that video. And as you can see, October still with the move down from yesterday is in the positive. We have a 5%, which is less than what we have done in September, but there's still a few days to go in October. If we were to close October like this, it will be pretty much one of the lowest performance that we can see for an October. Pretty much upside down with the analysis we were doing for September. We were talking about one of the best Septembers. In this chart is not showing beyond 2013. In 2012 or 2011, I can't remember, we had a better September though. But this October looks very similar to this one in here with 5.56, and that was bear market. If we compare the 5% now against 4 years ago, in 2020, we made 27.7. That is a lot more when we compare it with the equivalent year based on halving events, followed by 2016 with 14%. That's still almost 3 times more than this October. And I want to cover this MA, the 50 versus the 200. I happened to accidentally stumble into one of my older charts, and I promised this week that I was gonna be covering some of the old charts every now and then, and I think this is the right time to talk about this one. Not because I am an MA trader. As you can see, I mostly focus on other technicals. But regardless of me caring or using it very frequently, there are many channels, many influencers at the moment that are looking at this potential bull cross. Indeed, I haven't seen it much on Twitter, but I'm pretty sure that next week, if this ends up printing the bull cross, which is it seems unavoidable at this point in time, possibly by Monday or Tuesday, people are gonna start talking about it. And the last time that we had one was in October, end of October in 2023, followed by this impulsive move. We had mid-September a bearish cross. That bearish cross happened this year, early August. So if this was to play out again, we should be expecting an impulsive move to the upside. Just be aware that many times it happens that you get a bullish cross for different types of MAs, not talking just about the 50 versus the 200. And because they are lagging indicators, in some cases, they can actually call for a top, not the top of the cycle, but a local top. Don't assume, don't get tricked by influencers telling you that every single bull cross must produce an impulsive move. I'll give you an example. In here, you have a bullish cross in February 2020. Right after that, you had the COVID crash. So from the bull cross, you experience almost a 60% down. And I'm not trying to scare you, just trying to get you informed, because some people are going to hear about the bull cross and put 150x leverage and just expect it to ride just like this one. Do not do that. And the megaphone pattern on the monthly chart is looking beautiful. Still, we are above the trend line. We seem to be not just holding that, but also the horizontal support. The next task for the monthly is to overcome the 71.1, which is the highest close on a monthly candle ever for Bitcoin. I think that is a work in progress. It's doable, but at the moment we need to look into the pending items that are currently preventing that to happen this weekend. And I should say not preventing, but are lowering the likelihood that that happens on Sunday, because it can still happen. And if we look at the inflows of the ETFs, this is pretty much confirming that this rally so far has been driven by institutions buying through ETFs. This is once again looking as parabolic as what we had in March, where we went from accumulations of below 1,000 straight into 12,000. Right now we are going in October from 18,000 and now we are at 22,000. So 2K roughly move up in just 1 or 2 weeks, which is crazy. But the question is, how do you picture this particular cycle, a breakout above the megaphone pattern, pretty much all driven by institutions? What if they were able to sustain these inflows that we are seeing in here and cause the short squeeze still without having any retail in the market? We are at levels that are still looking like October in 2020 before the leg up. And at that point, there was money printing already pushing very strongly, and not just a little, but actually at that point, global liquidity index was already ahead of all that has been printed now. If you compare how much we have printed here, we're still putting lower lows in that liquidity. The amount of cash is shrinking. There might be a breakout on the way, but compare all the money that was being printed in here and how much we already print by October when we needed that breakout, and retail was still looking the other way. And at the moment, the liquidity seems to be shrinking and they are looking the other way. So which one has more likelihood to bring the retail back into buying? So there is a chance that institutions could cause the breakout, but I have to be honest with you, I don't know how high can it really get, because these people buy slow and the ETFs are buying spot. But when retail comes in, they go nuts with futures and they also start buying spot, which helps the rally to continue going higher. And guess who is then responsible for buying the bags of the institutions? Is the retail. But if there's no retail, are the institutions gonna dump among themselves? Like BlackRock is gonna dump on Fidelity. I mean, are they gonna just dump among themselves? Grayscale, ARK, and all of them. It's just ridiculous. At the moment, the short-term holder realized price is roughly slightly below 63K, which means that short-term holders at the moment are slightly in profit. Crossing that 63 and below can cause a cascade effect of short-term holders unloading. For as long as we remain above 63K, short-term holders may or may not hold for very long. Just a very good point to keep in mind. And yesterday we took out the CME gap. Every time I talk about the CME gap, I get on Twitter and YouTube comments from people saying, why do you care about CME gaps? Even someone was asking me why I have so much faith in CME gaps. I don't think I have faith on anything in trading. That will make me a terrible trader. I just look at statistics and numbers, how many times they get filled versus how many times they're still open. And we have 2 CME gaps open and over 100 closed. And that's just it. If it didn't work, I will just turn the page and stop looking at this. And indeed, nothing stops CME gaps from stop working. One day they might stop working and we will just move over to another alpha. There's thousands of alpha. And yesterday we closed the MACD daily still with the mouth open. Look at the data window on the right hand side of the screen. We have 1442 and the orange is 1437. So MACD cross, anyone telling you anywhere that is confirmed is wrong. It's very high likely with the price action of today. We will need a miracle, a huge miracle to undo this on Saturday. We only have Saturday to do that. And for that, pretty much the price needs to break above 70K to undo it, because at this speed, the mouth is already crossed. and the previous performance at these levels of MACD crosses has been pretty bad, 20% down. So I'm looking personally for a reduced impact, and that is because the MACDs are overall in the long term hitting higher with the tops and with the bottoms. So you can see that the bull crosses are coming up. From July, you get one at minus 2,000, then you get one at minus 1,000, then you get one at 400 positive. So unless we get a black swan event, in which case the next cross will be below that trend line, if things continue mildly positive, we should be expecting to see a cross somewhere above this trend line, which should provide less drawdown than what we had before. The previous drawdown was of 11%, so have that in mind and keep an eye for a black swan event, of course, to invalidate that reduced downside. On the 4-hour, I've been talking about this rolling over in here, and as usual, I always challenge my own opinion. My opinion is that there is a rolling over in here and that is looking pretty sketchy. We are doing lower lows now and lower highs, but guess what? I am also looking for an invalidation of this rollover. I don't like to be that trader that gets surprised by a U-turn of events. Sometimes it happens to me, but I try to prevent it. And today I'm gonna try to prevent it by observing this trend line that I placed a few days ago in the week. And yesterday I noticed that with the USDT depeg, we hit that line once again. And since we are going down in this trend line and that trend line at the top is also coming down, this is a potential bull flag in progress. It's being defined, it's not confirmed, it could get broken. If the rollover continues, we should expect to close a candle below that flag, telling us that we are wrong. The bull flag is not there. Ignore it. Continue. But a breakout from the top with a close and holding support above 67.7 could potentially give us a very, very bullish target of over 70K, hitting the huge liquidity at the top. So the opportunity is big. Reward is huge. It is worth looking at this with caution in case it tricks us and is just a false bull flag. And we're going to have to do a little bit of surgery here to the RSI, and I want to start doing these things during the video so you don't just get surprised by things changing overnight and you cannot follow up with what I'm doing. So I'm going to take these circles in here and the support line. Everything is useless at this point in time because we have the fake out there. What I'm going to do is I'm going to connect this line with the new support in there. Similar thing I did yesterday, moving this from here to here. This is expanding. There has been some fake outs on the upside and downside, and we need to react to that and adapt our expectations. So for a breakout on the upside, global breakout, we need to be expecting to hit above 57 on the RSI. And this is the potential swing trade that I was talking in the introduction. And we have a confluence of the trend line with the RSI. So at 57, we get a very early breakout in here, but going lower in the RSI, we could get also a breakout from 67.5. It depends how long it takes. If this is by Monday, you need less price. If this happens today or tomorrow, it needs a higher relative price to Monday. And remember, we are on a weekend. We hope not to get one of those pumps and a breakout from that bull flag today or tomorrow. That will be pretty bad because being in a weekend and hitting the 73K, leaving a huge gap over the weekend on CME, adding up to the already CME gap at 54. It's not a nice thing. Notice as well that on CME, this is printing a double top, but not when you look at the 4-hour time frame. You can see in here Monday reaching 69 something, and on Friday a little bit below. So thanks to that, on spot on Binance we can start building this flag, but we cannot on CME. There's no bull flag on CME. On the daily time frame, the battle continues, and there is just exactly what we were talking about. A battle going on in here, putting the shorts in stress, some of them adding to their position, which makes more and more attractive for market maker to eventually hit the top. The battle at the moment is being played against two important levels. One is the point of control, the area of more volume traded, which is at the moment 67K. And then we have the descending trend line in here that at the moment is at 67.5, which if we can overcome, that will be the breakout from the bull flag. So the 4-hour is telling us with a magnifier glass what could be the breakout that we need to get to the higher end of the range. If that doesn't play out and we remain in a status of rolling over like this, then there is no breakout on the daily, clearly. In that case, we could come back to 65.8 to test once again. We have done it twice already. After that, we have 65. And at that point, we are below the mid-range of the volume profile. And it's high likely then that we could be going for that 61, 61.5. During the week, I show all the liquidity that there is there. I will give you a refresh just in a few minutes. And bad news for the open interest because it went above, it broke out, and it held pretty nicely until the depeg. On the depeg of USDT, we came back inside. I still think that the open interest is in an uptrend in here, although I'm just noticing that this is kind of a bearish pattern for the open interest. I'm hoping that we can hold the 20 billion and we re-enter in here and we try to protect that area in there. Otherwise, this unfortunately could be a liquidity trap visualizing the open interest, which I think is still valid. And spot continues to sell since 66K, roughly 28th of September. Spot has done nothing apart from selling, and that is evident from the CVD of spot aggregated across exchanges. Futures is just speculating, going up and down with every swing. Big Whale Explorer is showing us that the big whales continue to withdraw more than deposits. That is kind of our card under the sleeve. It is bullish, but you can remain for a long time in an accumulation area, which is in the long term an incredible thing for a long run up. But as you can see, it doesn't necessarily trigger immediately, and it doesn't protect you from drawdowns of 20% going on during that accumulation. As you can see, their conviction in here was incredible. They just continue to accumulate regardless of the drawdowns. And if we were to see that in here, definitely is going to have a visual impact on the price, all-time highs, breakouts. Luckily, yesterday, unless this is not updated yet, the long-term holders didn't move a finger with the USDT depeg. But now that I'm seeing the time, it says 23:59 hours on Friday. So that probably is post the depeg. And zooming in, you can see that this is just going sideways unless they freak out on Saturday, and maybe tomorrow we'll see if it's pointing down. The megaphone pattern looks beautiful, but it is as painful as every single megaphone pattern that we have around the halving event. It's holding nicely. It's above the support on the weekly of 65.6. Yesterday we wicked down to grab the CME gap and we bounced back up above 67K. I don't know if over the weekend 67K will hold, but the low volume should keep the price pretty steady. That's what's been happening in most of the weekends in the past. The weekly RSI and stochastic RSI is looking healthy. Yesterday with the depeg, it came back below the support for a lapse of time and it went back above holding. That is healthy. Let's hope that by Sunday, tomorrow, we close the worst case touching the trend line but not below it. If we do tomorrow or Monday, we will review the outcome of that. And if you wonder yesterday why we went having all the liquidity right in here, being so stupidly close to take 70K, why did we drop all the way to 65K in just 1 second? They released the FAD. There's some speculative conversations saying that potentially, I have no clue, BlackRock could have been involved in pushing one of their companies to release that information. Old news. They got discarded, by the way. the USDT FAD is a constant thing on bull and bear markets. And I'm no one to tell you whether USDT is safe or not. I don't know. That's the truth. But what I can tell you is that they've been using the selling wall in a similar way that they did in March, I believe March last year. I'm going to show you that data just in a second. But you can see we were very close to liquidate these people there. And then the FAD came in and the selling wall became larger. And then we went straight for the CME gap. So they have the whole narrative ready to hit that level. And at the moment, we are just back to the same prices that we had from the 21st of October up until now, which is a full week just coming back to 67, just hitting the lows, hitting the highs, hitting the lows, going back to 67 each and every time. Liquidity below the price has now significant level of longs thanks to these 2 weeks. It's been getting heavier, and that's 64.9. I wouldn't discard over the weekend to grab and take that just because it's very close to the lower end there and it can be very easily grabbed. The top end at the moment is substantial, is juicy, it's got all the ways salivating, but somehow it feels like they still don't want us to enjoy the joy of seeing the fireworks that comes from liquidating tens of billions from these liquidity pools. That's coming just in 1 second. And if you look at spot on the order book on Binance, we have 600 in here accumulated right below the price that is at 70k. These sneaky bastards want to dump spot at 70k, and it's quite heavy what they want to sell. And the 97 million that we saw last Sunday, where we made the video about the huge selling wall, guess what? It has increased to 118 billion. That's almost 20% more. And I don't know what to make about this, because in the past 3 years, there's nothing that comes even close that has been ever filled. We have 134 billion here. It was January this year. I got it wrong. It wasn't March, January. And if we look closely, we can see that that never got executed. That was just causing the price to slow down on the way up. Why? Well, it could be that they wanted to enter from a lower price. And I can see how the liquidity goes from being right above the price to being right below the price, and suddenly and luckily they get a 200% right to the top at 73.5k. So the question is this liquidity at 70k that hasn't been touched there for psychological reasons to cause the price to come down sub 60s or on the low 60s and to take out some longs so they can get the privilege to do that right that we see there? That's anyone's guess. I don't know. I'm just trying to make you aware that in 3 years of history, you're never gonna find over 100 million in ask liquidity that was executed. At least when I look into FAR charts. If you have a better tool, if you're using anything else that gives you precision by the second and you can see confirmed orders, good for you. Write it down in the comments or share on Twitter a screenshot. I would love to see that's the case, but this level of 120 million can either cause a psychological effect or it can actually get executed and push the price down. What I don't know is how low can that thing push the price down. And at 61k, we continue to have 61.6, the largest liquidation below the price according to CoinGlass. And apart from, once again, 68.2, there's no much more in the past 30 days above the price. Remember, this is restricted to just 30 days. There's a heck of a lot here beyond 30 days. Below the price, we have all the way to 61.6, which coincides with that yellow level there. And it's definitely confirmed also in trading different, where we can see further detail. Let's remove the sub 60s because that's just too big and it spoils the normalization of the chart. But you can see 64.9 and the heavier is 61.1 and 67, 60.7, and then we start with the sub 60s that is evidently a lot larger. Good news on the alpha of net longs shorts delta. We could that could support the idea of that swing trade that's still questionable in here. If we focus on the delta, we can see that every time that we hold this line, meaning that there is an excessive amount of shorts, we not just tend to bounce, but also we break out from a trend line. At the point that we break out from those trend lines, the price has recovered somehow and then it rallies further. How much it rallies further? Well, that is not always the case. That is a huge amount. In this case, you got only 3%, but from here to here, you get 17%. And from this breakout to the top, we got 12%. So you miss part of the bottoming process. So if you are a degen, you can enter at this area. If you want to hold on a little bit more for confirmation, you can wait for the breakout. And guess what? We seem to have already bottomed in here. Nothing is guaranteed. This could still roll over and break below the major trend line. But at the moment, it's saying I'm breaking out from the trend line. So there might be further continuation to the upside. And that's the main reason I am looking for that potential swing breakout trade that I don't know how we are going to really be able to overcome the $118 million in there of resistance, but that's at 70K. So we have some upside before we could see a rejection. On fair value gaps, things are looking pretty different to what we have seen in the past months. You have to admit in here that there is a big gap, 2.3K, 2.4K to the next lower fair value gap. And ignoring this very skinny one there that is just $200 above the price, we need to move 3K to the top to hit the 70K. And that's where is all that liquidity. So pretty tough for the price now to decide just based on fair value gaps, because there aren't many fair value gaps. Everything is very balanced at the moment, and that is a result of the price having already shaken all the shorts, all the longs, and everybody around the price. So now the price needs to make a decision, make or break. Break, coming down below in here, going towards 63K, breaking the short-term holder realized price and hitting the 61K, or going to the top end and challenging the big boss at 70K with $118 million. And no good news about the dollar, because even though we still can claim that our resistance at RSI 58 is holding strong, you can see the trend line from 2022 up until here, but now we are knocking on heaven's door. We are trying to break it. We are getting very close. We are about $104.3, and we just need to get to $104.6, and then we have a global breakout of the dollar. No one wants to hear about such a thing. Neither anyone wants to hear that the gold continues to going, apart from Peter. What I want to hear is that gold breaks down, dollar breaks down, the Fed enters quantitative easing, and the global liquidity index not just has a very tiny insignificant breakout in here, still putting lower lows and lower highs, but I want to see that impulsive move of injections into the system to stand a chance that retail comes back and is not just the big boys that are pretty much having the cycle party by themselves. And before I let you go, I want to cover what happened yesterday with the depeg. Yesterday we saw the candle of the market cap of USDT entering into the red. It was just a very insignificant red, similar to these reds that you can see in there. USDC saw good news. I remind you that BlackRock is pro USDC because they work with Coinbase. That is my assumption just. And at the time yesterday, I was posting on Telegram, Instagram, in Twitter. We had a decent depeg in here. We went to 99,716, which is still better than what we did just a few days ago, 9th of October. You can see that many times USDT depegs. The worst one that we can see this year probably is in August. And this is the depeg that we are currently experiencing. You can see relative to the past is very small. And thanks to that, people starting flipping into USDC. At some point, it made it to 219 there and the small fraction. But then USDC started depegging a tiny fraction. That is just things balancing out across exchanges, people buying it, and then some people are also taking profits from this. Some people are buying the dip on each of these things. Some people have automated bots to trade these depegs and to make profits from that, assuming that it will always go back very close to $1. People are asking me, are you gonna do something about it? I don't know. Yesterday I was exhausted. I just say literally F it, and I went to bed. I made sure that you guys were informed, but I'm not a financial advisor. I have no clue who works inside the company of USDT, what are they doing, whether they lie or not. I tend to assume that everything is crap, everything is a lie, but somehow I need to make money, I need to take a risk, otherwise I just leave the space and go to somewhere else. I can probably find a job again in a bank and do head of engineering or whatever crap and continue building things that I don't want to build for people I don't respect. And also, I need to give you an update on this. I published it on Twitter. I made you aware that we were testing support on others. Others is all the altcoins minus 10, the top 10 market cap. And you can see that we have a pretty substantial breakdown of others. Altcoins suffer quite a lot, 9% down move that erased roughly 20 billion from the altcoins, and this is excluding the top 10 market cap, so it must be a lot more. The reason I look into others is because I care what my bots are doing, and my bots are trading literally any coin, and whenever we see something like this, it matters to me, believe me. So when we were testing support, I took action. I was more cautious, but now this is confirmed. This is a breakdown on the 4-hour from September up until now. The structure going up broke, and as Lux Algo Eco is forecasting in here, a retest of the resistance. It took that out of my mouth. I was gonna say we should be expecting a hit of the order block at 223 billion. That is a free indicator that you can use, although the price action concepts is paid, but you can get it with a discount from the description. And Bitcoin dominance has hit pretty much 60%, 59.75. So I'm sure that Benjamin is not able to sleep tonight. He must be probably sleeping on his bed. Apparently he sleeps on the floor, just staring at the 60%, not being able to fall asleep, just thinking 60 dominance, 60 dominance. I'm gonna make another video. But this is very important, and I understand. Dominance being this high can come from Bitcoin pumping or dumping, people exiting from altcoins into USDT, stable coins, or Bitcoin, running into the safety, but that eventually peaks. And the reason why people are thinking at 60 we're gonna peak is because there is resistance there, not because dominance cannot go beyond that. Dominance has gone in 2019 to 73%, in 2020 to 72%. Of course, now there is a lot more altcoins and stable coins, and you can do some arithmetics in here to exclude them like Benjamin does. But I think it's fair to think that around 60% there should be the top for Bitcoin dominance. So finally we can break down in here. The second argument for 60% being the top is that this is an ascending wedge, and rarely you see a breakout from the top on such pattern. We should be expecting this to just be a liquidity hunt, and probably by Sunday we could see this cooling down inside the pattern once again, and eventually breaking down into the territory of the altcoin season. It doesn't need to be precisely there, right? So it can be anywhere. Look at all these green boxes. Those are all the altcoin seasons I capture from the website of the altcoin season, and I took the time to place the moment where it starts and when it ends, and you can see the Bitcoin dominance. What is it doing while there is that altcoin season? Well, the flow of the cash is going out from Bitcoin into the altcoins each and every time. There are some small exceptions in here where the dominance was running, but still the altcoins were performing. I don't know, maybe USDT was entering the market into both possibly, and we have a period where both were running high, but that's an exception. Most of the time you should expect the Bitcoin dominance to crash hard during an altcoin season. And yes, this is a heavy video, guys, but there's one more alpha that it will be a sin not to share with you. We have all the liquidations of the longs at the moment in here, all the way to the low 60s, okay? That is this hill here. It hasn't been seen this high since May 2024, okay? And only took this amount of liquidations in here together with ask liquidity, limit orders wanting to sell, for these stops to crash. This one, again, this very small fraction of long liquidations with ask, liquidations with ask, another top, and here we are at very high levels of ask liquidity together with way larger levels of liquidations below the price, big open interest, and at the same time you can see that money enter in here with this candle, but right now is coming down. That means that the ratio between wealth and retail is starting to increase, and it increases usually into the red when you are already collapsing, and during the downtrend retail is left with the bags while those big whales trading take profits and go away. So there's still some green in here. I don't know if that's gonna collapse and take all that liquidity. No one does, but I want you to be aware that there is that risk there. Don't think that that is not possible, because that's absolutely wrong. Guys, did you know that you can open an account on an exchange from anywhere in the world that offers you leverage, access to altcoins in just 5 minutes? With the link in the description, you can open an account on Bluffing. I already have 2 accounts and it took me just 5 minutes to get access to leverage. And if you use that link, you get 10,000 in bonuses subject to trading volume and the lowest fees to trade. And of course, if you already have an exchange, have a look at the different crypto products that I have with discounts and bonuses in the description. All the data that I use, High Block Capital, Lux Algo, material indicators, trading different for the liquidity pools, all of them are offering exclusive discounts and bonuses in the description. And whichever you pick, you are supporting the channel to continue putting up to 3 videos a day during the week and 1 video a day over the weekend. Remember that from the next week, 3 videos in the evening are only going to go to Coin Bureau Trading. The same style of video covering the swing trades, covering the long term, all the data, but 3 days, 3 evenings are going to go to Coin Bureau Trading. So make sure you subscribe to that channel. I'll let you know on Twitter, Telegram, and Instagram as usual. It will really help as well that whenever you watch those videos, you leave a comment, you hit the like. That will really support me in this journey of being invited as a guest in such a huge channel. Coin Bureau Trading is the new trading channel of Coin Bureau, which is the largest crypto channel in YouTube with 2.5 million subscribers. So thanks so much for all that support. I'll see you in the next one. Bye bye.